All right, we're getting some interesting potential breakouts in a lot of areas today. I'll look at each one of them here quickly. Gold, I noted in my past videos that the cartel was going to try, they were going to fight tooth and nail to try and prevent gold from getting above 1800. That is failing today. The next hurdle is to break through this trend line. I saw a lot of people get frustrated, give up last week when the cartel attacked the miners in silver. And we had that big divergence between gold and the mining stocks and silver. I tried to explain to people what was happening. That this was in no way a prediction that gold was going to turn back down. It was simply an attack to try and keep gold suppressed and prevent gold from breaking above 1800, and that is failing today. And as long as gold continues higher, as soon as it breaks this trend line, it's going to confirm an intermediate bottom, then the miners in silver will break that manipulation and start to follow it higher as well. So a lot of people get frustrated and give up. Even though I told them exactly what was happening, emotions took over and they sold right at the bottom when they should be buying. Oil also starting to look like maybe it's put in an intermediate bottom. In my last video, I had noted several weeks ago that this pivot here, this daily cycle low, would need to be broken. We needed at least one failed daily cycle before we could get a completed intermediate cycle low. The last recognizable intermediate cycle low was way back here in November. So there's a really long intermediate cycle, and the same principle applies. A breakout that occurs late in a cycle usually doesn't produce sustained follow through, and the same thing for a breakdown. Breakdowns that occur late in an intermediate cycle or any cycle don't tend to produce sustained moves. And so this intermediate cycle is really long, so the odds were not good that a breakdown below this support zone was going to produce a big sustained move. I saw people predicting $55, $50, $45 when this breakout occurred, but the breakdown was just coming way too late in the intermediate cycle to be sustained. And you can see today oil is back above that resistance and support zone. So I think the odds are pretty good this is an intermediate bottom. There's some other signs I'm watching. I just did a report for my subscribers where I described those. But at this point, actually, let me lengthen this chart. I want to show you a couple things. All right, so this long-term chart shows this very well. This first rally right here, I noted that it probably didn't have good odds of getting through this resistance at about 66. It was occurring very late in the daily cycle. Again, breakouts that occur late in the cycle usually don't produce follow-through, or they don't break out. That's exactly what happened here. We had to pull back and then try again. And then we hit this larger degree resistance zone. This was the previous 3-year cycle high in oil. And again, I warned people that very late in the intermediate cycle probably was not going to get through that on the first try. And if it did, it was very unlikely to produce a sustained move. But if this is our intermediate cycle low, then we should test this early in the intermediate cycle. And this time we should get a breakout and a sustained move. And the next resistance zone is up here around $100 to $110, $120 in here. So I think that we have, actually I think the potential in energy is huge. I'll explain why. At this 3-year cycle low, and I'm pretty sure this was a final bear market bottom, oil was temporarily negative by about $30 to $50. If that's not a final bear market bottom, a sign of all-out complete capitulation, then I don't know what is. And the rubber band principle applies. Most of you know what this is. The further price gets stretched away from the mean in either to the upside or downside, the more aggressive and durable the move tends to be in the other direction. Oil at minus $50 was about as extreme of a stretch as I have ever seen, maybe in history. So I think the potential for a very aggressive move to the upside is in play in oil over the next, well, bull market usually lasts 5 to 10 years. So um, I think we have a very strong possibility of reaching $100 to $110 during the next intermediate cycle. And before this bull market is over, I think oil is probably going to go considerably above this all-time high of $147 based on this final bear market bottom of minus 30 to minus $50. And then finally, we're getting a breakout. It's a little more apparent in the QQQ, which I'll show you next, but this is the Nasdaq composite, and I've been saying for a month and a half now that I think 15,000 is an important number. It's halfway between 10,000 and 20,000. And remember, for the last 4 or 5 years, I kept telling people 10,000 was going to be a piece of cake. Well, we've left that behind a long time ago, and I said 20,000 wasn't unreasonable, and we're halfway to 20,000 now, and I think this midpoint, halfway point between 10,000 and 20,000, may be an important level, and if we break through that, I think it's has the potential that we could start the final parabolic run and maybe make that move from 15 to 20,000 in a very short period of time, as in maybe 2 to 3 months. And if we do, that would qualify in my mind as a completely recognizable parabolic bubble, and then at that point at some point you got to control greed and say, I haven't made enough. Make sure you get out so you don't get caught when the bubble collapses. Now, a quick look at the net QQQ. All right, so the breakout's a little more robust in the Nasdaq 100, and I think this is where the bubble's going to occur. You can see we had about a month and a half or so of sideways consolidation here as the Nasdaq was churning underneath 15,000, and we're breaking out of that today. And if the dollar rolls over and starts a multi-month decline, I think that is probably the fuel to not only push commodities, gold and oil higher, but also the stock market, and especially the Nasdaq and the Nasdaq 100, which is where I think the bubble is going to occur at. It's going to be in the FANG stocks. They've been leading this entire bull market, and I think the last final surge probably will continue to be in those FANG stocks.